Hello, everyone, and welcome to another Wall Street from Main Street podcast. Joining us today is a returning guest. This is Jimmy Morrison, not the guitarist, but the filmmaker of the new documentary coming out, The Bubble. Jimmy, welcome back.
Hey, thanks for having me on, John.
All right, so, recently you just said you had an announcement of your new film. Do you want to get involved in this new announcement?
Yeah, we can just start right away with it. A lot of people have been wondering why it's been taking us so long to make this film, and the reason is we're not making just one film, we're making two films. So we're going to have The Bubble come out as a double feature this winter. It's going to be two 80-minute films, which people can watch both of them, or they can just watch the first one or the second one. You know, they can watch them in either order. It's really something where we want people to be able to just watch one film and come away with an understanding of bubbles and how to predict them and how to not get blindsided by a crash. So the first film is going to be the housing bubble, and it's going to look at the past, look at the causes of the housing bubble, and look at the Great Depression, the 1920s, the 1970s, the S&L crisis, the stock market bubble. But then the second film is the bigger bubble, and what that looks at is the present and the future, and how all of our responses to the housing bubble have created just even bigger bubbles and really just delayed the inevitable crash.
All right, and I have a question. What motivated you to do a split-in-half documentary instead of one?
Well, part of my idea behind doing the documentary is that most people don't want to spend the time it takes to read an entire book on the financial crisis. So a lot of people haven't really been exposed to the ideas of why this has happened. And so I wanted to do a documentary where people could just, sit down for 80 minutes and get an understanding of that. But I really felt that to explain these issues in a way that, are easy for people to understand and accessible to the general public, I felt it would be better to do two films because, once again, people want to skip to the end of the book. They want to just see what's next. So this gives people the opportunity to, maybe not get the history lesson and just focus on what's next and learning how to protect themselves.
All right, and there's also one other thing you were talking about a private screening or a potential for.
Yeah, we're actually planning on doing 200 screenings across the U.S. and Canada once the film premieres. But we also understand that we have a core audience that's been waiting for this to come out, and they're excited to, see what we have to say. So if people go to our website, thebubblefilm.com, they can sign up for our email list, and we're going to be doing some private test screenings that would give people a chance to see the film this fall before it comes out in the winter.
All right, and I'll also, below this interview, there'll be a link to thebubblefilm.com, so you can click on there, so it won't be hard for any of our listeners to find it. And the other thing is, in terms of the film, you said it's going to come out in the winter?
Yeah, that's right.
All right, and I was going to say, what is, in terms of making this and splitting it up, what did you come away with most when interviewing a lot of these experts?
Well, just that this is something that has happened before on smaller scales, but has just kept getting bigger and bigger. And, we've had crash after crash. We're really in a serial bubble economy right now. But it's one of those things where each time the debt is getting higher and higher, both on the government side and on the personal side. And so the United States is really in no position now after this 6 years of supposed recovery. The middle class and the lower class are really in no position to handle another financial crisis, yet that's exactly what we're facing because of the things we've been doing. So it's kind of something that kind of shocked me that it's something that's happened so often, yet we're not taught anything about it in schools or really exposed to it at any age through the education system.
Yeah, it's definitely true. I remember reading Mises's book, The Theory of Money and Credit, and I don't know how many times they have to say it, but the best quote, and this just sticks vividly in my mind, is credit expansion can never take the place of capital formation. And just for years and years, I would say basically since the 70s, and in this serial bubble economy, it doesn't seem like they learned that maybe it's not spending, consumption, and credit that drives economic growth. Maybe it's something else.
Yeah,
Uh,
when they think the solution is to get a credit card and go out and buy a TV, and that's what's going to save the economy, you're not going to have any long-term growth with that. You're only going to have short-term, a buzz from that printed money that they're injecting into the system. But when you look at the long term, you really don't have growth. If you look at the stock market, for example, even though it's up, 45% from the year 2000, when you adjust for the CPI, which doesn't even take into account most of the inflation that's happened, CPI was up 40%. So you basically lost any gains you had in the stock market just from prices going up. So it's really just an illusion of wealth, and society is going to have a correction to address these imbalances.
Yeah. Well, not only that, if you look at it now, half of Americans don't even own stocks, so they don't even get to enjoy this sort of artificial boom like they got to in the 90s and the housing bubble.
Yeah, it's interesting with all these businesses buying up stocks. A lot of the stock gains and a lot of the dividends are just the $500 billion that businesses have pumped back into the stock market by buying their own stocks. So it's really something that it's a lot of risk for very little reward.
Yeah. Would you agree with my assessment also just in terms of the real economy? If you're a shareholder of the company, stock buybacks are great. But wouldn't that show of sort of a sign of an unhealthy economy if all they're doing is buying stocks? Wouldn't like an optimistic entrepreneur or business owner take that money and invest it into a product or innovation instead?
Yeah, I mean, it's really an indictment of their method for recovery and the economy we're in, because it hasn't worked. We aren't growing. If you look at banks and why they're not lending, one of the reasons they're not lending is the Federal Reserve is literally paying them interest on reserves to just keep the money that they got from the bailouts, to just keep it at the Federal Reserve. They're just paying interest for that, and they have been since the bailouts in 2008. I mean, I don't think that any investor in a normal period of time would be willing to just let their money sit there for 0.25% return, but that's what the banks are doing, and it's because they don't see anything else out there. There's no way for the economy to restructure on a sound base because they're discouraging savings and just trying to get people to just spend money.
Yeah, I definitely agree with that, and that's actually the fundamental principle of Austrian economics and why we need higher interest rates. Would you agree with my assessment that yes, the stock market would tank and the bond market would probably be non-existent, but in order to have a sustainable, growing economy, capital formation and savings must take place, and in order for that to happen, you have to have higher interest rates.
Right, and it's not that, we're just anti-stocks because stocks are evil. In a normal time, this wouldn't be a problem. But the problem is all this money's been created out of thin air and driven into the stock market, so it's all distorted. It's not based on real wealth. And so what we're actually doing is just correcting back to reality and getting rid of this illusion so that we can start over on a sound base.
Yes, definitely. And also, speaking of interest rates and all, what's your view on the current effect of tapering right now?
Well, I think that Janet Yellen has indicated for years kind of what her position is on whether or not the Fed should print lots of money. And it's always been that the Fed should print lots of money and that they should lower interest rates as much as they can, if not make them negative. But right now with this taper, it's interesting. We're actually creating more money now every day than we were when they started the housing bubble. So even though relative to what they were doing, they say they're not printing as much money, but when you look at it historically, it's still, just record breaking. But they've also replaced a lot of that. What they were doing was buying government bonds to bail out the government, because they're not just bailing out banks. It's the government that is bankrupt as well, so they need bailout money. And so with quantitative easing, they were buying these treasury securities to bail out the government, and now they're just basically having other countries do it for them. $40 billion a month is coming from Belgium. It's just kind of arbitrary.
Yeah, I'm actually glad you brought that up. I actually thought they weren't going to taper, and I thought just because literally they couldn't. Do you think the Fed probably has a deal with the ECB to take place because all of a sudden they have negative interest rates, they're doing easing, they're providing monetary props.
Yeah, I
All
mean,
of a sudden, you know,
I can't speculate on what their intentions are or what arrangements have been made, but we do know that the Federal Reserve has lied to us before, and that in 2008 and 2009, even all the substantial bailouts we were hearing about, there were still trillions of dollars of bailouts all around the world where they were giving foreign central banks money, they were giving foreign banks money, and they were just lying about it. They were pretending it wasn't happening. So it's something that historically has happened, and it would not surprise me one bit if there's some sort of arrangement where we bail them out in times of need, and they're kind of helping the Federal Reserve hide the fact that they can't afford to taper. But I also think that part of that is just as this money has been going into the economy, there is somewhat of an artificial boom where these bubbles are being created. So I think that in the short term, it may look like everything's okay, but just because they're able to handle the taper now, they're not going to be able to sustain it.
yeah, I actually personally think that they'll have to reverse course just because I don't know who can. You said it's a government bailout, but who else is going to buy?
Right.
And not only that, if you look at Janet Yellen's background, I personally think if you just look at her DNA, she grew up as a 60s progressive radical. She was a huge academic Keynesian. It's not in her DNA to normalize things. Would you agree with that, or?
Yeah, I mean, she seems to have a pretty radical notion as far as what role the Federal Reserve should have in a society. And, I mean, it's not something where I'm just saying we need somebody else to get in there, and Janet Yellen isn't the right one, and I'm disappointed in her not being able to manage this, huge economy. It's that we don't believe that anyone should. We should think that interest rates would be set by savings and loaning money into the market and actually allowing people to determine what rates those are instead of just people in a government bureaucracy dictating them, from a boardroom from afar.
Yeah. Oh, definitely. I actually consider the Federal Reserve part of the federal government. I read technically it's not, but yeah, if you ask me, it fits every definition of the bureaucracy. And
well, if you look at like, for example, when the government hires mercenaries to go into other countries, like, yes, that's a private business, but that private business doesn't necessarily get judged the same way as other private businesses in society. The government's given them this special, privilege of violence. So I think it's a similar thing where even though the Federal Reserve may technically be private, when the government's given it the power to control the money supply and just create money out of thin air and says, hey, bail out the government whenever it needs it, it's essentially a government institution, just like Fannie Mae and Freddie Mac were.
Yes, I think that's a great comparison. And also, speaking of the Fed, they've been buying up a lot of mortgage-backed securities. And if you look at the housing numbers, it doesn't seem to. Obviously, Wall Street's benefited from it, but it doesn't seem to. Today, startups were horrible. Single-family homes, those numbers came in very disappointing. It shows when the market, they can provide a monetary short-term sort of high, but the housing numbers. Are you starting to see sort of a housing recovery come undone, or?
Well, I think starting in kind of early 2012, the housing market kind of bottomed a little bit and had some sort of a rally as a lot of this money that was created went into that sector. But what we're seeing is since Bernanke first started talking about the taper in July of 2013, house prices have started to stabilize in a lot of places. In some, they're even falling. Phoenix is starting to get hit pretty hard, which a lot of people remember was hit extremely hard during the housing bubble last time. So I think we're going to start to see lenders increase their lending standards, and it's going to be a similar situation where, although it's not exactly the same housing bubble, it's something where a lot of distortions have been created.
Yeah, and I was actually reading one of the weird thing is I think this housing crash might be different because last time people had mortgages, they were forced to leave. This time, a lot of hedge funds are buying all cash payments to get yield. If it starts tanking, it can create a sort of panic sell, and the houses could become stocks.
Yeah, I mean, I'm not trying to make any predictions. I'm more just trying to teach people the lessons that are out there as far as what the distortions are that creating money does. So I think even if that isn't the case, even if houses just go down 30%, like they did with the last housing bubble, that's something that can be crushing to a lower middle class family. But if you look in the last 6 months, the last year, the thing that has been lagging behind, that has been keeping up housing, has been upper income people, higher income people, and I don't think that will continue as interest rates rise and as there isn't as much money being created to enter the economy.
Yeah. Now I have a question. Do you think the Fed will lose in the near future? Might lose control of interest rates?
Not necessarily in the near future to the extent of 20% interest rates like we saw in the 80s, but I think we are seeing something already where mortgage rates have risen a little bit, and we're seeing the impact of that. That's something that we'll see in student loans, that we could see in farmland. These are something that even a small move in interest rates can have a dramatic effect for things like corporate bonds, which have tripled in the last few years. Basically, like I said before, households and businesses are in no place to take on another financial crisis, and that's what we're looking at.
Mm-hmm. And one thing you also wanted to talk about was farmland. I was going to say, a lot of people, including myself, look at farmland as probably a good investment. Jim Rogers likes that. You actually live in Iowa and have pretty much close ties to farmland. What does the farmland market look like to you?
Yeah, well, I think it's something that Jim Rogers is absolutely correct in as far as long-term trends go, and that's kind of what his focus is and what he's talking about. And when he says that you should invest in agriculture, even in Iowa, he's saying basically there's going to be a correction, but you might as well just get in because it's going to be so much better in the future. But I do think that we have a crash to face, although not as severe as some other places like with the housing bubble and with the stock market bubble. But with the taper we're already starting to see in Iowa, farmland prices have, or as far as sales, have gone down a little bit in the last year and in the last 6 months particularly. Nebraska and South Dakota are going up still a little more, but I think they could have a small adjustment. But that's only creates new opportunities for new investors to come in and revolutionize agriculture, which is something that I think is going to have to happen in the next decade or two.
Oh, that sounds great. I don't know much about the agricultural revolution, so I can't put any comment on it. But I was also wondering, what's the food prices have been hitting high lately? They've been going up, and how's that affected the farming sector?
Yeah, I mean, it depends on what people are substituting out of. Obviously, beef has risen quite a lot in the last few years, and that's something that I think we're going to see even more. The government hasn't really been accounting for the inflation that we see in groceries. They like to just ignore it and pretend that oil prices, gas prices, and food prices aren't going to impact people. And the fact is that that's something that most Americans are struggling with, that as their food prices go up, as their rent goes up, as their gas prices go up, they're struggling to even get by. So we're definitely in a tough situation, I think.
Yeah, I definitely concur with that. So, yeah, even gas prices are hitting high despite oil still just hovering around 100. It's as high as it was in '08. So
Yeah, and I think since we're talking about oil, that's something we should mention, that with the technological innovations that have happened in oil in the last 5 years in the United States, that really has kind of saved the United States economy as far as delaying this crash and giving it a little more time to eke by. But it's not something that I think is going to be sustainable and will save the U.S. economy.
Yeah, well, yeah, it sort of reminds you of sort of the Danny Taggarts. And one of the reasons this revolution actually occurred is because there was so little government involvement during the hydrofracturing process that we were able to extract oil and gas we never thought we could.
Yeah.
So, all right. I was going to say, it was actually great having you on. Just in case someone forgot a little bit about the announcement, can you tell people how they can get to the private email list and just about the screenings and everything? So
yeah, sure. If people are interested in just signing up for our email list to get notifications on test screenings and other things with the film, or if they're interested in sponsoring a screening, you can do both of those things from our website, The Bubble Film. You can also follow us to hear news about the economy on Facebook or Twitter, and feel free to contact us. We'd love to hear from you.
All right, great. Thanks for having on. I look forward to this film and many more you produce.
Yeah, John, thanks for having me on. I'd love to be on again.